All right, cool. So, today we're going to talk about a strategy that is going to help you limit the amount of trades you take. But I will say you can kind of translate this strategy onto lower time frames, pretty much like any strategy. It'll give more opportunities, lower probability. And there are ways you can increase that probability and raise your win rate, but it's really simple, right? And it basically just takes a little bit of a spin on pretty similar concepts to like the 2022 model, but used in different ways. So one thing about trading that I've learned is that the more you're able to take, so to speak, like the meat off take the meat and leave the bones of a strategy, and you can sort of take that same thought process or same logic and apply it in different scenarios. So, like the overall 2022 mentorship model is very simple, right? It's like you have an area of liquidity, you look for a certain time of day to get below that, and then this pattern, something along these lines, on a 1 minute, right? Or whatever time frame you use. All right, so that's just an idea of a liquidity sweep. That's all it is, right? It's not like it's anything new. It's just a time-based one that's meant for indices. But it happens on nearly on every asset class. So the time frames we're going to be using, the ones you can use. So you could use H4 down to a 15-minute, right? And we took a trade based off of this last week, which was the GBP NZD trade. You can also use and I'm sure there's maybe other ones you could use. This is just what I've used. And I think that they go from the top down in terms of what's best for a beginner would be up here. This would be more intermediate, and this is more, I guess, expert, so to speak. But it's funny because everybody wants to start right here. That's what they see on YouTube. That's what they see on Twitter. But, I can confidently tell you that this is not, you don't need this, right? Now, it's nice. It definitely gives more opportunities, but statistics show that traders who trade less make more money. That's just proven fact. So, you can use this, but I want you to it's basically taking the ICT model and just taking the same logic, but a little different. So you'll see what I mean. And there's gonna be two possible ways to enter and two methods of targeting. So, sorry, excuse me. So basically, what we're gonna be looking for, and it doesn't necessarily you don't have to use daily bias with this. If you're using the higher time frames, if you're using like a 15-minute and a 1 minute, I would be a little bit more concerned with that. But overall, and this is just where it can make it very mechanical. So, we always hear that stuff, like a price moves from buy side to sell side, right? Pretty easy to, to try to say that, and it's, makes it a lot simpler than it really is. But what you want to pinpoint is really just waiting for any kind of swing point on your higher time frame to be broken. So remember, that's either the 4 hour, 1 hour, or the 5 minute, or I'm sorry, 15-minute. So what we'll do first, just to give you a look at, is it right here, at this. So this could have been any swing point, right? Just when we see a swing point, high or low, get pushed beyond, that's our trigger to look for this setup. So after that, what we want to do is we want to go down to our lower time frame, and we want to look for the structure, the last low created before that structure was taken. This does not have to be like, your strong low, weak low, none of that bullshit. It's just literally the last candle that has a higher low on either side. I feel like this goes without saying, but if this were a long, it would be the other way around, right? It would be the last high. Everything has an inverse. So, but I always get asked, can you do like a bullish example of this? And it's just crazy to me because it doesn't make any sense. But when we look at that structure, we don't care about any of this right here. We don't care about like everything between this high and this low is now a new range, because this range is something that took liquidity. Now, what happens a lot of the time is, the market will just come back down and go up. Okay, if that happens, right, and you just displace the upside, this setup's probably not going to present itself. Now, if it just chops around like this, right, that's different. If we just start to see that kind of price action, that's fine. But you don't want to see, price tapping into this liquidity and then pushing down and then rallying again too hard, because what that tells you is that, those stops aren't being bought or sold to. So in this example, we have price pushing up. This gives us our little leg of price right here, right? I'm just drawing a fib on it just to kind of, probably better if I did this, just to highlight what I'm looking at. So everything in that range is really just, you could look at this as an accumulation, so to speak. But this is the swing point we're looking at. So after we mark that out, we want to draw a line out on that first low. And we want to wait until this happens. All right, we want to see a displacement. All right, this is the key. Notice how we tap it once. Did anything happen? Now, of course, if you would have just sold here, yes, you would have been profitable, right? But I promise you, a lot of times what will happen is this gets hit and then you run. So we're hitting out liquidity. We're just kind of stalling and then finally get that displacement. So at that point, I just looked at this whole buy to sell range. Now, this is where it gets a little bit, I'm going to give you a very mechanical way how to do this. And I'm going to give you a very kind of more discretionary way. So this, what I looked at here, my logic with this is here's the low we made before. Like I just look at the pivot before the displacement. So we made a low, high, displacement. So to me, that whole little range, if we go on the 5 minute or the 1 minute, we can go pinpoint some crazy level. I mean, either way, it got swept. But that was my logic on this. So you always want to have your trade, like if you're trading based off this, your stop's always going to be up here. You don't want to put a stop lower. I mean, for obvious reasons, you can just get, because again, this is the important range. All of this is internal liquidity. So going back to like a big range, right? Like any range we can come around and chop around it on internal liquidity. Like for example, let's say if this was a bullish range, right? Then we come down and we chop out these lows and we chop out these lows, and that's okay, right? Because that's all just internal liquidity. You're still bullish. It doesn't change anything. So you don't want to have your invalidation point somewhere where the setup's not invalidated. So putting your stop loss, above these highs would, I mean, for one, just be pretty rookie as if you're an SMT trader because they're pretty clear equal highs, but it's just not what we want to do with this strategy. So once we get that displacement down, two ways you can enter. You can just watch for a footprint, right? Like I did. Now, obviously that wasn't the most precise entry. And the other way you can do this is to wait for the displacement to end and form a swing low, and then just use an optimal trade entry. You could use a 62%. You could use 705. Right? 705 will probably give less opportunities. I'm sure there won't be that much difference. But the mechanical way would be that, right? Just be to target like that. Now, the strategy we're going to go over today is just going to be affixed to our strategy. But I will show you some other ways you could target as well. So we'll just take, oops, try to hide this, my old analysis. So it would have been a pretty much instant trade, right? If you would have taken it that way. And, some people may not like this, but I mean, to me, those are trade setups that I really like. They're very, don't take much time, very thoughtless. You're using fibs it's a very mechanical, right? 4 hour high or low taken. Okay. 15-minute structure broken with displacement. Okay. Now I just draw a fib, right? Now the other way you can do it is how we did it. And, start to add some of your discretion in there. Like, okay, here was the displacement down. When I'm looking at the market here, what are some other levels? Now, another way you can target is draw like this right here. And you can just mark out areas around 1 or 2 standard deviations. Now, in this example, I probably could have done that. Like looking back, that's why I'm adding this in there, because I was like, damn, I could have just targeted 2.5. Would have been a bigger trade, but that's okay. So you could use that as a targeting method as well. So really, again, the steps are you just look for some kind of higher time frame swing point. So you're looking for this to be taken. Once the market comes up above that, you're then going to kind of zoom out and get a lower time frame, or zoom in, I should say. Zoom in, not zoom out. Get a lower time frame view, and what you want to see is, like let's say this is the high, right? This is the high right here. This is where price is coming into. Price kind of comes up and rallies. And then we take it, right? So out of this, in this example, this is where people mess up, because they want to say like, okay, this is the low I'm waiting to be broken, right? But it's the last swing point, right, before that. So once that happens, and that is broken with displacement, it can come around, tack around, hang around. But once it displaces through, forgive my drawing skills. Once it actually displaces through, then we want to wait for it to form some kind of swing low. Maybe not, may not immediately happen. And then the options of entry, you could either look for a fair value gap that was caused in this displacement. That would be the probably the easiest in terms of, like picking out an entry based on a price delivery array. Or you can draw a fib and use optimal trade entry. Right? You can also blend and say, okay, well, I'm going to look for this at optimal trade entry. This and that, I'm going to look for an order block at optimal trade entry. That I'll leave that up to you guys, but I'm just going to give you guys something very mechanical, very simple and easy, which is that optimal trade entry. And then as for targeting, I'm going to say fix 2R, or you can use standard deviations of the swing leg. So let's go back and look at some NASDAQ setups. So that was a setup we actually took. That was my mindset behind that. So let's look at this over here on the 5-minute. We see we have a low getting taken, right? And it doesn't have to be an immediate reaction of this low. It could be like something like this. We'll take a look at this and see how this looked. I guess it would be this low it was taking. We'll see how this looks. It can close beyond it. That's fine. It's just price getting beyond that level. That's all we're really looking at. So, and it can even kind of displace through it if it's a higher time frame level too. Like let's say if you're on a 1 hour and like on this day we are actually tapping into a monthly fair value gap right up in here and taking out some pretty strong buy side. So, let's go back on the 1 hour. Like, yeah, it kind of displays through that high, but what context? You know what I mean? So, like, let's look how this would work. And this is a trade you wouldn't have taken because it's at the end of the day. But look, again, mechanical. The last low that was formed was right here. The market, we'll see how this ends up working out because this, don't trade this on a Sunday. But that would be the setup. But of course, the thing is here, I mean, whenever we have these big pushes, like, what are you going to do this? Or something else we can watch out for is some kind of optimal trade entry. So we'll just mark that out, and we'll just leave that for later. This will be a kind of a forward test study. I think that helps because that gives you guys an example on price action that hasn't happened yet. So over here, this was that 1 hour low. We'll go back and get another view again. I'm on the 1 hour. Yeah, it's right here. So this is what it looks like on the 1 hour. We'll take it. Here, I'll do this. This always used to help me when I was studying. So then we'll go to the 5-minute. Well, this is the 1 hour view, right? So just so you have this over here. All right, so that's what this looks like in the 1 hour. So again, we're looking at here, the price comes down, pushes up and displaces through that high. Now this is where it looks like a setup where a discretionary trader would have probably won because you have this breaker right here. Gets tapped into. So, if you trade off the breaker, something like this, been a pretty wide stop. Looks like it would have ended up hitting TP, but I mean, it looks like after a full day. So can't say we would have held that or not, to be quite honest. One thing that I've used, if you have a setup like this, like let's say if you entered this trade on, what was that, on a Monday in the afternoon, and you had to close out before the session was over. Right in here, I mean, you still got good gains, nothing crazy 1-to-1. But what you can do is when you close out, come to your desk the next day with that bias in mind. Or one thing that's interesting here that my eye spotting did this. Yeah, it looks like it ended up coming to an optimal trade entry, I guess, if you waited for that. That's actually pretty interesting because I haven't tested the idea of waiting like the next day and using old levels. But it just shows you how like these key footprints in price, as soon as we come up and form that swing high and price starts to actually pull back, you can draw a fib on it. And I mean, look how it reacts to the optimal trade entry of that area. So just watch these areas as like significant little legs in price because I always used to get tied up in, what liquidity am I looking for? Why that reversal? And the best way to answer that is, context. It's always, okay, like this took out a 1 hour low, right? And then started to displace. So that was a liquidity raid. Like this is smart money involved in the market, right? That right there. That's like their footprint of them buying, so to speak. The process of order pairing was happening right here. So that leg in price is going to be significant. So OT of that leg in price is going to be significant. Discount of that price or of that leg in price is going to be significant. And if it's not significant, then the bias is not bullish and you would look for a reversal. And if you look at the time here, it's also tapped into that breaker as well. If you look in the time here, That's right around that reversal we look for. So there's probably an example of the 15-minute occurring at that time as well. There is. So if we look over here on this leg in price, what is that? I don't know if somebody I couldn't hear what it said, but so once price comes down and takes out this, so this is a 15-minute example. So notice we're in the 15-minute now. You can just watch really any area, and this is where it gets to like this example is ICT 2022. But the only difference is I think a lot of people look for like the wrong liquidity to be or the wrong structure to shift. So like what I usually do and what ICT usually would say is to look for this, right? Look for that as the shift. But what's helped me a lot in terms of you not missing trades as much is waiting for that shift like this, right? Now, once that happens, in this example, there wasn't really any kind of fair value gap to trade off of, but there is an order block right here, right? That gets traded into. So really the value of this strategy that has helped me, so to speak, is just figuring out exactly what footprints to trade from and really getting a mechanical way to confirm these liquidity rates. So it's just watching that structure that forms before the low is taken, right? And notice this hits not long after. I mean, this is a 1 minute chart. It looks like forever, but it's not. So let's just say if you traded off of that. Now I will say something about the 15-minute strategy. The OT is probably not going to hit all the time, right? It's just not. So if you just did a fixed 2R, you'd have gotten out of this trade right almost up into the market closing, but good trade nonetheless. And it's weird how that happens a lot. It's like the market is just trying to move 2R from these entries. That's why I picked that, because if you're swing trading, like if you're using the 4-hour and the 15-minute, you can start to use different targeting because you're using a higher time frame. Another thing this works really well for is crypto. So let's just look. I was marking this up before I got on here. So, what we'll watch for this week too is a move up into optimal trade entry in these areas. And you'll notice that these are these key little ranges that cause this big push down. We'll see if we even make it up to that area. You know what I mean? Because here is the last low was formed. You can draw a fib from the high all the way down to where we started to really pull back after the displacement happened. You can also, so like my logic with something like this is I would just look at this last little pivot. And the reason why is because it has an order block and it has a fair value gap and it's an optimal trade entry. Right? So, and it kind of dips into this fair value gap too. So I would be watching that area. And you can see how this is valuable as even a bias tool, even if you're not, like set a limit off of it. Like I'm not just going to set a limit on that. But you can watch setups or for setups to form based off that ideology. So another one we could use, let's just find another chart we can go over is ETH. Trying to find, there's probably a ton on the 4-hour. So if you look, let's just look right here and see what happened. And the thing with this setup is it's not going to give you a shitload of entries. Notice how I started the video by saying, see, and then this is an example where just taps that fair value gap that caused a displacement and rallies away from it. But it's one of those, it's not going to give you a ton of setups. That's why I started off by saying, this is going to help you like limit the amount of trades you take. But it's one that can help you in terms of bias a lot and also just help with patience because it gives good setups. It's not going to give you a setup every single day on every chart. If you're watching multiple charts, it probably can give you at least one setup a day. See if we can find another one. And this is using the 4-hour, of course, so there's going to be less. Looks like it didn't come to optimal trade entry, but ended up coming down into the fair value gap. Now, something else that I've noticed is oftentimes the fair value gap that causes the shift is when you want to really watch. Now, I did wick under it, but, that's crypto. It's going to be like that. But a lot of times you'll notice that's what gives like the reaction, or that's kind of where the smart money support is found, so to speak. I haven't messed around with the 1-hour and the 5-minute too much on crypto, because I don't go usually into those lower time frames. Let's see if we have an example. There's the last low. There's a displacement that was formed. And you can see that. as soon as that displacement forms, it seems also that these legs, like the last little pivot, a lot of times right here is usually where the market will find resistance and fall from. Is whatever causes that shift down. Look at some forex pairs. Want to give me a pair? I don't know if there's any questions. I haven't even looked, to be honest. My bad. I didn't know I was muted. Oh, I fucking bought down there. I thought that's what somebody had said. What's up, JC? Yeah, if you guys have any pairs you want me to look at, let me know. I'd rather you guys pick one. Gold? Is that what you said is gold?
Yes.
Cool. So gold, let me get a different chart that's not marked up. Oops. Oh. Let's see. Right now. So there's a 4-hour. Yeah, we smack down through there. The one could have used this, and this is like, you know, you could use this as a fair value gap. Obviously, that was not the, you know, prime area. Let's see how optimal trade entry worked. Because OTE on gold seems to work pretty well. I've got a lot of people testing out that the strategy that I've used or that I put out a video on, and they've used it on gold. So like even if you just did that logic on this, it would have been a pretty clean trade. Just using that 0.27 as a target and 6.2 as an entry. So there's one way you could have done it. Okay, or if you just targeted this and just did a fixed 2R, you'd have hit a trade pretty quickly. We'll look at some other examples. Look at both those. Here's one it probably wouldn't have given an entry as far as OTE. It's okay. Just kind of came up and then just rallied away. Here is the second one. This one's interesting. So this was the this was the market shifting. Like that was the first liquidity raid we drew, like on the 4-hour. It's right there. But if you get a 15-minute, that's actually the market shifting from the last setup. So there's a raid right there. You'd have waited for this, displaced through it. I wonder if that hit that OTE or not. Looks like it did. That would have been a pretty wild trade. So the thing is too, what I would recommend, like for example, me looking on gold just for this not even 5 minutes, I'm looking at it. I can tell you that OT probably is going to be the better strategy for gold. And that's because OT just works really well with gold. Using it with crypto, I'm not really sure what the best one is. I mean, it seems like everything I test, man, like literally every last thing that I've ever tested on crypto, it just has a lower hit rate and lower profitability than everything else. But yeah, so I mean, I would keep messing with OT. We'll take a look at some other setup. Look at the one in the 5-minute. This is very similar to the setup that I used to get funded trading gold. Was the 15-minute and the 1-minute rendition of this. Oh, let's see if we can get. Looks like this probably ran away without you, but. And this is why I never use this to retest or to. Yeah, it just ran away. I think it fucking sucks for trying to use replay mode. Okay, somebody's making some background noise. Sorry, monkey, I had to mute you. Look right here, so we push down under it. I wouldn't call that displacement. This is one, I mean, it'd be just I mean, I guess to be honest, if you did, you know, it looks like it would have worked if you used OTE. You drew it from the high right there. Would have been right on it, maybe missed it by like a pip. No, I hit it. Interesting. Seems like gold really likes OTE. That was one I can't say. And on hindsight's 2020, I can't say I would have taken that because I don't consider that as displacement. We look at this one already? No, I don't think so. Oh wait, no, that's a different one. Looks similar to that setup we just looked at though. definitely didn't give an entry. Seems like gold a lot of times just runs too. Let's look at a 15-minute and see how it works out. Because this would also been a lot of the times the 1 hours will be 15 minutes as well. So let's look right there. The one thing I will say with using the lower time frames is it's very important to use time. This is also news. Actually, I just realized that. I want to use that. Notice the market came up. That's where it really displaced above. So to use the OTE, would have been that because that's the low all the way up to the high. So that would be, I mean, pretty clean again on gold. I mean, who would have held gold through the close, but it seems like gold really likes OTE. And this is why it's important to backtest, like especially when you're using these very mechanical strategies. It's really important to take this, and that's why I give you guys kind of different variations, is because nothing is gonna work the same. It's there's no such thing as like a full one size fits all. Like, sure, does the concept work similarly? Yes. Is price action? Yes. But certain pairs are going to trade differently. That's just the way it is. Like you got to get used to certain things. Like for example, US 30 trades completely differently than Nasdaq and ES. It does. It just does, right? Different strategies work on both. You have to be aware of your surroundings. And actually, I'm sorry, forgive me. Looks like this would have been the low. I just realized that. So forgive that. Or the high, because it's the last high before we come down and touch this. Gold be playing though with these all these equal highs. But let's go to ES and mess around with the 1 hour and the 5-minute. ES would probably be kind of hard because ES is pretty like Snorlax compared to Nasdaq. Oops. One thing, and another thing too, with indices, Nasdaq seemed like it was want to do this as well. It's like the leg that gives that impulse, like not all the way down here, but like price comes up, consolidates, and then pushes up, and like that leg right here is what you want to pay attention to. But I haven't tested that yet, so I don't want to give any direct directions on that. Yeah, that's pretty much it. I don't want to beat on a dead horse too much. If you guys have any questions, let me know, and I'll run over them. But yeah, that's I would highly advise you to test it on what you trade. Remember, it's the same idea, just either the 14 to the 15, the 1 hour to the 5, or the 15 to the 1. You mean you gonna ask? I don't know if somebody, what is that? C? What's up, C?
I was looking at
So if I was trading one strategy, I would trade one strategy because that's how you have to maintain your edge. There's going to be times where strategies conflict, but trying to juggle that is going to lead you into paralysis by analysis. And what it really comes down to is you have to accept like that sometimes one strategy is going to win and one's not. And that's just the way it is. But trying to avoid a loss always is definitely going to be detrimental overall. Oh, my bad. I misunderstood the question. I thought you meant what time do we rule this strategy out due to that one. So for one, I wouldn't rule it out. I've tested it. Sometimes it takes a long ass time, like a lot of candles. What chart are you talking about again? You said? Yeah, you said that. My bad. So Bitcoin and USD. We'll just look at Coinbase chart. So like this right here. Yeah, I mean, you could look at that as one of these setups for sure. Now, and it looks pretty good too, just because I would say right now the bias of Bitcoin's kind of weird. It's definitely not. One thing too with that strategy is you got to make sure that this isn't happening. Like if you go watch the beginning, it'll talk about like using liquidity for bias and see how we kind of closed under that and didn't really displace. So I mean, I see like just looking at that 1 hour, I definitely see what you're talking about. But when you zoom out, it's kind of like again, that's because if you don't use that initial part of the strategy, it'll be everywhere, right? Because when I was testing it, the way that I noticed it before I started trying to make it into like an actual step by step strategy was I just saw this, right? And then I tested it and it was like it worked extremely well sometimes, but it also gave too many setups and the win rate wasn't good. So I was like, okay, how can I refine that? And that's why I added in like, okay, let's look and see on a higher time frame like what's the bias, because this just looks like it's starting to take out liquidity and just accumulate here. So when that happens, a lot of the time until we displace, usually we'll go back up and seek out buy side before continuing down, if we're even going to continue. So the market's really just chopping around here with Bitcoin, like we have that happening there. So what happens? We go into the next low right here, right? So then we fail to take out both of these lows. Then usually what happens? Go to the high. So did that clear that up? So you mean does this move right here satisfy what? This one? What about it? I mean, whenever you say external, you're saying to this range right here, yes. But like when I look at so when I look at these overall ranges, like I'm sure that you're saying like, okay, here's one, here's one, here's one, here's one. But to me, like until this gives that shift down, I'm not looking at it like, cause like let's look here. What happens right there? Like if we go back in time to that, it's the same thing. You see what I mean? So like that's like the first step of reversal, but then what happens? The market doesn't reverse. So the key point is waiting for both counterparts. Like for example, here is what you're trying to see right now. You see what I mean? And that is what started, the market starting to come back to the downside. So if that, but so you always want to make sure that you are watching for that to happen. So, but to keep that strategy mechanical, you can just literally use displacement and liquidity rates. Like this is a setup, and we're looking at the daily on Bitcoin. This is where you lose money. This is where the money that was made here gets chopped up. For me, at least. Like if I sit here and try to continuously trade this, that's why I put stops to break even on some of the crypto. Just like, all right, we've killed it. Let's just wait, because this happens every time, like literally every time. Like the good move to be in crypto was like 2 days, right? And then you hold it, consolidates, chops everyone to pieces. Boom, again, everybody's happy. And this is what happens. People don't trade this, and they get chopped up here. They don't trade this, and they get chopped up here. Right? They didn't trade this, they get chopped up here. You know what I mean? That's just how crypto does, man. Would I do TA on ZS? I just saw that. I don't know how. No, yeah, of course, man. No problem. What is ZS? Zscaler? I would be eventually looking for this breaker. Um, And he kind of came up, gave a shift down somewhat on the daily. To be honest, I could probably see this going up and taking out this high again just because of the way it came down to this gap. You're not really displacing that much. You know, you're shifting. But I would either wait for some real energy to the downside and then I would look for 117.78. You don't get that, maybe go to like a 4 hour, wait for some kind of shift above this high, and then a retracement to trade up into this 162. And above that, I would definitely be looking for a reversal. What's OT? It's just fib. So OTE is just the 70. It's the 62%, 705, and the 79%. But I just use the 62, right? 62 and 705 is really what I'm paying attention to. Yeah, no problem. Thoughts on ETH? Probably similar to Bitcoin. It's just where everybody just wants to trade it and just gets chopped to living pieces. I mean, overall, I want ETH to go the weekly fair value gap, right? So if I'm looking here, I mean, really, I'm echoing, but I mean, it looks good. Looks better than Bitcoin. I'll say that. As far as like the 4 hour, the 15 minutes really give an opportunity. What I would look for is just see how we react under these lows of this range. Into that 4 hour order block, see if you hold that. Or was it a daily? Actually, it was a daily. Can also watch this whole little down move. Yes, I mean, ideally, I would like a sweep of those lows. And then if you can get a nice reaction off of that, that would be a nice setup. I'm actually going to send an alert for that. But again, what I would want to see is a shift, or I'm sorry, sweep down here, and then on the 15-minute, a shift up, trading the upside. We could just use the same strategy we just used for that, for the 4 hours. So I'd want to see that, push under it, and then the 15-minute giving us what we talked about in today's lesson. ETH Bitcoin looks good for long. It's always good to watch. Brandy be killing it with crypto. Yeah, this looks like it wants to go. Didn't listen to me over here. But it looks like it wants to go up now. I mean, if it doesn't at this point in this weekly fair value gap, taking out these lows, just accumulating there under all this sell side. Yeah, I would look for an alt rally soon, to be honest. There's a good eye on this because I hadn't looked at this. Yeah, definitely looks good. Yes, this video is being recorded. Check Ocean. Jesus, that coin is still alive. It's been a while since I looked at this fucker. It looks good. I would look at like this as your overall, oops. This is your overall range. Making higher highs and higher lows. I mean, yeah, this looks pretty good. I think that overall, who's that? Sorry, I had to meet you. Overall, you'll probably head up into this area right here. All these highs. So look at it like this. Okay, the weekly range is bullish, right? How are we reacting after we're taking out this sell side at optimal trade entry? What is the market doing? Popping the upside, displacing above highs. It's not the strategy we look for because that would be all the way up here, but it is taking out these short-term highs. And then you look, it's like, okay, what order flow is being respected, right? We're taking out sell side into bullish price level arrays and doing what? Displacing away. Now what? Right here. Right? Overall, I think the market's bullish. Would look for raids on the sell side, maybe consolidation here, take out these lows, and then push to the upside. But overall, be bullish to 45 cents. Onan? Never heard of that. Part of these stocks. Yeah, I don't know. It could be a tough scene for this one because look at this last pivot. You might get some more sweeps above these highs, what I would probably look for. But I'd be careful buying this above this high. Overall, I think that's where you're going though. I mean, not that far down. I shouldn't draw like that, but I mean, who knows? Equal lows at this gap, so. Onon has phenomenal fundamentals. They're a Swiss running shoe company. Okay. Yeah, it seems like they're pretty new too, so it's hard to use these higher time frames, but I just look at it like this was at one time a big area of selling. If you get above this zone though, like if you can flip this like and start staying bullish above it and disrespect that bearish order flow, I would say this shit was gonna fly. But other than that, I would say sweep to that and then go down. And especially if you break this to the downside after it's traded into this big fair value gap, that would be massively bearish. Another thing to be mindful of though is like if we're looking at the advanced market structure, what is the low of this right here? Literally 1 penny higher, so that'd be kind of like, I mean, ideally, if we don't take out this high, you could be a buyer under that low. Oops, wrong button. We don't take out that high before this. Like, let's say if the market comes down, because we have our long-term low, or if we come down and sweep out this intermediate term low, and then start to displace, that would be very bullish up into this high. But again, in this blue zone, I'd beware of buying personally. Yeah, on that note, guys, I'm gonna hop off here. As always, I appreciate you all. I'll post up a schedule for the streams this week. It'll probably be Tuesday and Friday, and then Sunday again. But let's look at the GDP. Wait, pretty. I mean, it's the third week, so usually we have not as much. The first 2 weeks are the worst. So it looks like we're pretty open this week. I mean, who knows if it'll be a massive amount of volatility. I mean, these are all these kind of like, yeah, they're red folder, but I mean, they're not anything to write home about. So they'll cause a reaction at that time, but it's not like don't trade that whole day. Dollar CAD could be interesting this week. Yeah, I'll watch dollar CAD and indices. But yeah, as always, thank you guys too, and I will see you guys on Tuesday. Peace.